Hello, everyone. Today is Friday, February 10th, 2023. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 670, presented by the Trade Risk, where it is our job to break down the most important trends, price action, and noteworthy moves that you may have missed across financial markets. And we're going to jump right into it today. I'm a little bit pressed for time, so we're going to run through things perhaps a little bit quicker than usual. Now, headline story here, markets bracing for Tuesday's CPI print. I think this is what is on a lot of traders' minds right now, is this new data point that we're going to get next week. And we are seeing a little bit of kind of fear and anxiety out there. Markets suffered their first, or Nasdaq anyway, suffered its first down week on the year. So I think it was up 5 weeks in a row. We'll look at the charts in part 2 here, but I think it was up 5 weeks in a row, and this was its first down week in a good stretch. And so we have obviously Catalyst nicely on deck for next week. We do have some cross currents occurring at the same time. So this is feeling like there's a little bit more to this pullback this time than the prior kind of multi-day corrections that we've seen over recent times. We have yields that are starting to actually break out now and starting to move to some meaningful higher levels. We're going to look at that in part 2. We got the VIX, which is back over 20. We had a follow-through week for the dollar, which we talked about its reversal last week. And so these four things kind of combined here should give us a little bit of at least an open mind or some awareness that there's some shifts going on here underneath the hood of the market. And there's a newfound sort of bid for oil returning sharply this week, despite the dollar moving higher. Now, if we take a look at the performance this week, again, everything was in the red. It's been a while since that's happened. The Russell 2000 was the biggest loser here, 3.3% down. You can see over the past 1 month, though, everything's still firmly in the green. So again, seeing a little bit of a pullback of recent gains. Now, this is going to feel a little weird, but when we look at our stock market trends here, take a look at this right-hand column. And yes, the 200 period simple moving average, believe it or not, is starting to rise in the Russell and the international stocks. So I'm using the ACWX ETF, which is basically, world stocks minus the United States. And you're getting rising 200 period simple moving average. Now, it's very slightly rising, and honestly, your data, it is probably going to be semi-even data dependent. Like, I think the 200 SMA is rising by like a penny. So it's very sort of fickle and relatively flat, but it is rising. And so that, I think, is just a little bit high level view that there has been a long stretch of time now. There's been a little bit of healing process here, perhaps in the Russell, which did bottom out earlier and has gone more sideways than certainly the Nasdaq or the SPY for a long period of time. So certainly notable here, and again, just adds to the mixed signals that we are seeing, and that's really going to be a focus of ours this week. Medium term, everything's still rising. Short term, rising minus ACWX. Now, vol environment is on the rise as well. So we highlighted this last week, actually. So even though we saw markets up last week, and we sort of used that tongue-in-cheek title last week where stocks rally on a hawkish Fed and slowing earnings, and we sort of talked about the fact that things were getting pretty excited out there. We saw volatility actually staying bid last week with up markets. And so, of course, now we see in hindsight, this week was a down week, and we see vol continuing to rise. VIX back over 20, Nasdaq vol almost up at 30. So again, changing of some character here, at least going into this catalyst. Now, internals, market internals, NYSE 52-week highs and lows, still drawing on the bullish side here. So we're still seeing more highs than lows being made day after day. Notice these numbers have cooled off a little bit. We had a couple of days last week in the triple digits, and now we're back to double digits. And so, that to me is again, there's just a little bit of hesitation here. We're not seeing bulls completely run away with it. Again, it was a down week for the market. We might expect this a little bit, but if this starts to turn negative, coupled with a lot of these other factors, dollar breaking out, interest rates rising again, then it's sounds like we could be in the, in store for a 2022 type of playbook or rotation. We're not there yet, but, that's what we need to be thinking about. Sector performance, well, this is pretty easy. Energy. I mean, energy was your only safe play this week. I mean, healthcare and utilities, they served you decently. And, I guess I really should extend that. I should give a little more credit to some of these other sectors here. Healthcare, utilities, financial staples. I mean, all of these pretty much were flat this week, and you really saw the hit down here in communication services, discretionary, real estate, technology, materials. These were the big losers this week, and they have been the biggest gainers, broadly speaking, this year. Now, if we look at IBD industry ranks here, so I'm pulling this from their digital subscription. So shout out to IBD. They are a sponsor of our show and content. They make this possible. So if you want to get access to their data tables, use this link, and you can find a link in the description. It's a messy link because case sensitivity matters. So when we look here at their industry ranks, which get updated every night, you can see that we still have, I guess, I should say we have less oil and gas in here now. So again, when we looked at this a few weeks ago, and certainly last year, this was all gas in different industries of oil and gas. And now you can see we've got field services at the top, but basically everything else down here is retail, metals, retail again, leisure, machinery, apparel, so steel producers. So you've just got a much more diverse group of industries that are actually leading the pack here, and a little more sort of real world economy type names, not technology. Now, if we take a look at treasury yields this week, this was really part of the biggest story is they're breaking out, and this chart actually only shows 5, 10, and 30 years. It's really the short end. I mean, if you look at the 3-month, the 1 year, I mean, Fed funds rate just generally all spiking out and breaking out, and so you can see now we get the 10-year moving up to 3 3/4, from 3.5 last week to 3 3/4 this week. That's a big move, and 5-year from 3.6 to almost 4%. That's a huge move. So this is definitely going to start to be a matter. Let's say the equity markets are going to start paying attention to this sooner rather than later if this trend keeps up. Now, if we take a look at dollar and commodities here, I mean, crude oil, huge winner, and natural gas as well. But crude oil really found a nice bid this week, 8.5% to the upside. Natural gas, 7%. But I mean, it's been down so much that number isn't really that impressive. Oil really more of a standout. Dollar index again was up, so we saw follow through in the dollar. Ag, ETF and commodities, they were holding up, and gold stayed hung in there. Copper was a little bit down. And right down this list, Bitcoin losing some ground as well. So before we get into the charts here, our quantitative systems here, Merlin and Lamerick. So these are professional grade strategies, fully rules based. They run entirely without me. They are hard coded, researched, and tested. And our medium term swing trading system here is increasing its exposure actually. So you can see this is actually getting a little more hungry for risk appetite. Now I will say that especially when we looked at the sectors on the performance this week, I mean, Merlin is really kind of fishing from right in here. I mean, it is much more dominated in the healthcare kind of industrial staples, a little bit slower kind of boring things. It's not reaching for technology right now. It's kind of letting those signals pass, and it's really going after some of those I guess lower beta and sort of more value type names. Lamerick here, a short-term system, 25% invested, nothing too much. It's very quick and nimble, and it's been pretty tactical here, and it looks like it's going to be relatively lowly exposed going into CPI. The overall index here is about 50% cash, 50% invested in stocks. So if you are looking for professional grade strategies to help kind of diversify your trading, or to give you some other ideas, take a look at the trial we have on our website. Check out our performance information. We post it every single month. January's just got up there, so see if that can help you out. And with that, we'll be back here in just a second with part 2. All right, we're back. We've got TC 2000 open. We are looking at the S&P 500 cash settled market with our trusty old roadmap that we've been looking at for many, many months. Now, here's what went on this week was mostly a volatile sideways to down kind of drift lower throughout this week. So this was Monday's session. We started the week off with a slight gap down, and we, kind of held in there and just chopped around a little bit. And then we came kind of roaring back on Tuesday, got everybody excited for a nice kind of maybe pullback setup and a launch back up through 4,200. And ultimately that failed. We had an inside session, broke to the downside here on Thursday, and then Friday we stabilized towards the end of the session. It was mostly red, and then we kind of came back here into the end of the day. So we closed right at this 40.90 level, and this is a level, again, we've had drawn on here for feels like years, but certainly has been a good solid 10 months or so, all the way back, which has been a significant kind of inflection point for markets, and we've been using it pretty successfully to sort of navigate a lot of this chop. And so we closed right at it. I mean, we're basically teetering underneath it, and we're right inside this zone right now. So this to me is just a really, really challenging, difficult, choppy spot here for markets. Obviously, we've got this catalyst of a CPI coming up on Tuesday, which everybody is fixated on. And so it's certainly going to lead to some good movement here. And part of me thinks, you know, some of this worry and anxiety and the fear and the focus on this number is everybody kind of getting defensive, raising cash, and getting sidelined for this event. And so part of me, again, this is more just kind of discretionary gut feel kind of talk, is that this could be a buy, you know, kind of buy the event, right? Sell the rumor going into it, or sell, you know, the fear going into it, and it could turn into a kind of a risk on event almost regardless what that print looks like. Again, I'm not married to that. I'm not trading off of that. It's just a gut feel sort of reaction to some of the sentiment and chatter about what's coming up on Tuesday. But, you know, at the end of the day, we are technicians here. We follow price and the story that price and volume and volatility tell us. And so when we look here at the S&P 500, we just know that we are losing this little bit of band of prior resistance, this inflection area. And so for me, I'm going to keep things as simple as possible, because I'm not smart enough to parse what this data is going to look like and what it really means for markets over the next 3 to 6 months. So I'm going to keep things simple and use this 40-100, let's call it. I mean, it's basically a 10-15 point band from 40.85 to 4100 here. And if the market is below there, and if it's losing and back below these December highs and these inflection points back here, then I'm going to be much more suspect on the market. I'm going to be much more pessimistic, glass half full. Again, you've also got this kind of trend line that has been riding higher here throughout the year, and you can see we're starting to break it, arguably have already broken it, and we're now trading on the wrong side of this trend line that started in January. Now, of course, you can draw this. This is what makes me not use trend lines a whole lot, because there's lots of ways you can sort of connect it. But again, it's a zone, and you can see that the market is just teetering right here on kind of this breakdown, and it can turn into a launch pad, or it's going to be, the cascading point, the break point. And so your time frame and risk tolerance is going to dictate and determine whether or not this is, actionable enough for you to act on. But for me, the S&P 500 is just definitely at a hard spot. We got a catalyst coming up. It's threatening to break this near-term momentum, and you may want to take act and take notice of it. If we look at the weekly chart, you'll see a inside week here printed, if I clean this up. So we got an inside week printed here. So that basically implies there's some indecision and some vol compression going on here. It is in the context of, 5-6 weeks up in a row. It is underneath resistance. So again, we're going to keep an open mind here that this could resolve in either direction, but it shows that this market is gearing up for some type of move in some directional sense. And for me, again, just back to the S&P real quick, if we look at this view here, I mean, you could easily be a trader here and say, I don't want to be involved in this market. I mean, forget 40-100 or this 40-90 level. Just call 4,200, 4,185. I mean, this is the big zone. This is where we stalled out. This is an even, arguably bigger zone that has even more weight and inflection to it, going all the way back to February of 2022. So a full year long level of interest here. And you could say that I don't really want to participate in this market until we can prove momentum over 4190 or so. And that is probably a very reasonable approach as well, to be a little more hands off and let this noise settle out here and wait for that resurgence of rotation into equity markets. So that is kind of the way I'm looking at it here. I think you got to be very careful, risk off. I mean, last week I talked about this S&P 500 trade that I had originally put on way back here and ride it, kind of rode the uptrend up here, added to it here, took some profits here. And basically, as we started to get up here last week, I said, you know what, this is getting a little bit too hard and I'm just going to take it off and reduce because it just gets more difficult up here. And I still think it's difficult. And so I really don't have too much exposure discretionary. I have obviously all the allocations to my Merlin and Lamerick trading systems, and I'm going to let them do the thinking for me over the next week or so. Okay, so that is the S&P 500, the way I see it, the way I'm looking at it. The Nasdaq 100, once again, I mean, it came rip roaring right into this 310 zone. We talked about it. I mean, it hit it. It failed. Pretty textbook here in terms of its importance. It's significant, going all the way back to June and May of last year, and now it's pulling back and consolidating. So you can see it's kind of breaking or testing this uptrend that it has generally been in for this year, this rally, and we're starting to break down below it. Is this just going to be a 5-6 day pullback that launches higher, or is this a break and we're going to see a real kind of cascade loss of momentum and bear market continues? I mean, that's what we're looking for here. You've got some small signs of cracking. So again, you've got evidence enough to reduce risk if you'd want to. And if you're going to give it a little more room, then just know where you're getting off. But for the Qs, I mean, this has more room to fall. I mean, there's less ambiguity here. I mean, really, I mean, I don't see much, but between 280 and 310, this is a big zone in here. And honestly, if it can't recoup this, this momentum, this slope, this trend, then I would be a lot more cautious here in the Qs, just because it doesn't have all of that prior memory like the SPY does, like we looked at with all these different levels that it's carved out throughout the way. So keep that in mind, and keep that risk in mind. Russell 2000 checking right back to this zone in here that we've looked at as well. So again, you can see on a weekly chart, a beautiful kind of inside weekly bar got printed here. Momentum still running pretty hot on this weekly chart. So notice, we are trying to move here. We're trying to do this regime shift, but we've got now a more orderly pullback. We're kind of coming into a spot where bulls really want to defend and not lose this November highs. If it starts breaking down and closing below 189 or so, it's right there now. It just gets a lot less interesting. So keep an open mind. We're at inflection points, and let's talk about some of the other movement that we've seen out there. So we've got the dollar, which we talked about last week. You can see that it's starting to wake up. It went sideways. It had this nice kind of breakdown off this FOMC here, and that ended up being a trap for the bears here. So the trend to the downside didn't continue. We popped up, then we gapped up, and now you're seeing we're just getting continued momentum here, and we're starting to see a shift to character in the dollar. And as we talk about, the dollar is a wrecking ball for risk assets. All risk assets really, when a dollar is launching higher here, most things denominated in it and all the flows that it affects is just a tough road. So keep an eye out on this. It went out towards the highs of the week here, and dollar index continues to move up. I'm going to bring in, let's see, so shame on TC2000 because they don't really have a lot of good interest rate data, or yields, I should say, on government bonds. But if we look here at, so we got trading view up here, we look at, say, just the 1 month yields, for instance. So look at those moving on up here to new highs. Look at the 3 month yield, which is breaking out to new highs here. Look at the 6 month breaking out to new highs. Look at the 1 year yield, right? Breaking out to new highs here. So the whole short end of the curve is breaking out. And, really you go down the list, 2 years breaking out of a base here, 3 years, 5 years, right? Everything's starting to move up. And so that obviously is just, again, going to be a concern here. Got the dollar up, got yields starting to ratchet up, and equity markets sooner rather than later can't fight that. Or at least I don't think they would be able to, but I guess we'll see. So that's sort of the pessimistic rotation that's going on. And of course you got VIX now, which is back over 20. And no longer a teenager. So getting back into these old levels here as people bid up some protection going into that event. So that, I think, really kind of covers all of it. Oh, oil. Actually, oil was a big move this week. So take a look at oil here. So you can see it's been channeling down here, but it was this rollover that we talked about last week, and we found this bid. We just did not see any sellers emerge down here at the lower end of this range at the January lows. In fact, we saw the opposite. We saw just a bid and a pickup right here. So if you look at the weekly chart, I mean, this consolidation is pretty darn orderly. And, you know, I don't know that it's so actionable right now. It just looks like a lot of chop, but it's certainly not left for dead here. And it did get a nice kind of 2-bar reversal pattern going on. So watch for some follow through next week. I mean, this is tricky going back and forth here, but I mean, if this starts clearing over 71.50, and this is the USO ETF, I'm not sure what the spot crude price would be, but you know, if you start breaking out over here, then you know, you're talking about a pretty significant structure break. So we're not there yet. Let's keep an open mind, and it did it in the face of, you know, a rising dollar, which is kind of curious. So I'm going to leave it there. I do have to run, so I'm not going to look at any sectors and industries, but hopefully, you know, you managed this week well, get a little bit of a pullback, got some volatility next week and some catalysts. So keep an open mind, and please let me know your thoughts in the comments below. What are you looking at? Are you looking at the CPI data and an event as sort of a you know, catalyst to the upside or downside, or you know, what are you thinking about it? Let me know your thoughts in the comments below. And as always, I want to thank you for tuning in every Friday. We do these long form market analysis videos to hopefully help you out, game plan for the next week. We've got those IBD links in the description. We've got our trial links for our trading systems in the description as well. And I will leave you with that. So take care, have a great week, and we'll see you back here next Friday.